Market analysis techniques in Forex trading. Market analysis in Forex involves studying factors that influence currency price movements to make informed trading decisions. The main objective of market analysis is to identify profitable trading opportunities by analyzing price trends, economic indicators, and market sentiment. The three main techniques used to analyze the Forex market are sentiment analysis, fundamental analysis, and technical analysis. Sentiment analysis is the process of using data and algorithms to gauge the general sentiment or emotional state of traders and investors toward a currency pair. It captures whether the market sentiment is bullish optimistic, bearish pessimistic, or neutral. So, it helps traders identify trends, anticipate market movements, and make informed trading decisions. Currency prices are influenced by economic indicators, geopolitical events, and overall market sentiment. So, sentiment analysis collects and analyzes news, economic reports, and social media data to assess market reactions. It provides a deeper understanding of trader psychology, identifies potential trends before they are reflected in prices, and allows traders to anticipate market reversals or corrections. Fundamental analysis. Fundamental analysis evaluates a currency's value based on economic indicators, geopolitical events, and government policies. The aim of fundamental analysis is to determine whether an intrinsic value of the currency is undervalued or overvalued, and predict future price movements. So, it helps traders make long-term, informed decisions by understanding the underlying economic factors. Fundamental analysis is guided by several core principles, including key economic indicators and additional factors that influence intrinsic values of the currency. Central to this approach are interest rates, inflation, GDP, and employment data. For instance, higher interest rates set by central banks often attract foreign investment, bolstering the currency's value, while controlled inflation signals a healthy economy. Beyond these core metrics, other influential factors include trade balances, political stability, and consumer sentiment. So, fundamental analysis provides a strong foundation for understanding currency value and long-term trends. Finally, technical analysis. Technical analysis is the study of past price movements and trading volumes to predict future price directions in the Forex market. The main purpose of technical analysis is to identify trading opportunities based on historical patterns, trends, and market behavior. So, it helps traders make short to medium-term trading decisions, focusing on price action rather than economic fundamentals. Technical analysis itself is focused on three core concepts: price reflects all information, prices move in trends, and history repeats itself. Firstly, price reflects all information. Technical analysis is based on the idea that all market information, including news, economic data, and investor sentiment, is already factored into the current price. So, rather than analyzing outside factors, technical analysts study price charts directly. Secondly, prices move in trends. Prices in the market don't move randomly. They tend to move in identifiable patterns or trends over time. These trends can go upward, downward, or remain sideways, and understanding them can help predict future price movements. And finally, history repeats itself. Price patterns often repeat because they reflect human psychology and behavior, which tends to be consistent over time. By identifying past patterns, analysts aim to anticipate similar movements in the future. So, let's look at an example of trading the Euro-USD pair using all three trading analysis methods. Assuming the European Central Bank ECB is about to release an interest rate decision. Sentiment analysis. Before the announcement, analysts review social media and news sources. And public sentiment shows pessimism due to rumors of a rate cut. So, bearish sentiment on Euro-USD suggests potential selling pressure. Fundamental analysis. The ECB's decision will be based on economic indicators like inflation and unemployment. If the ECB cuts rates to boost the economy, this may weaken the euro in the medium term. So, a rate cut could make euro less attractive compared to USD. Technical analysis. The Euro-USD chart shows a strong resistance level, 1.1000, and support at 1.0800. Technical indicators, like the RSI, suggest Euro USD is currently overbought. So, if Euro USD fails to break resistance, a downturn might align with the rate cut trading decision. Enter a short position on Euro USD with an entry near resistance at 1.1000, anticipating a rate cut induced downtrend. So, as we see, combining all three approaches provides a well-rounded view, helping traders make informed decisions. That's all about today's video. Thank you for watching. Stay awesome and keep tuning in. See you in the next video.